Cramer, welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to save you a little money. My job is not just to entertain, it's to educate, it's to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Sometimes everything goes wrong. Today, everything went wrong. And I mean everything. Stocks, bonds, news flow, counter, you name it, which is why the Dow ultimately tumbled 249 points. S&P lost 0.69%. NASDAQ dropped 0.82%. And this came after a big rally into the close. How could everything be most foul? And yes, how can we still profit from it? Let us count the wayward ways and try to make sense of this market in what seems like a senseless world, but is not. First, this is the first day of a notorious trading month, September, where the market has historically performed very poorly. On average, it's the worst of pretty much all 12 months.
Sell.
4 out of the last 5 years, September's been down.
Sell.
Its average decline of 2% for the last decade. Horrendous. A bear could say, I rest my case. Why is it like this? For starters, lots of reasons having to do with how the year unfolds. In a good year like this one, big institutions take a look at how much they're up, and they axiomatically take profits. Silly? No, it's being responsible. I did it every year at my hedge fund when I was up this big at this time. I was done. Yeah, finished for the year. If you aren't in, you can't give anything back. I sold many of the positions that were in my trading account. I had some investment ones I didn't trade right at this point of the year and just day traded until January. By the way, where do you think I got this idea? I wasn't alone. Almost all the big guns did the same thing I was taught. Many mutual funds also have years that end in October, so they have to take profits before that for taxes. Knowing that, some big funds try to get ahead of their end-of-the-year calendar year moves, and the calendar doesn't lie. Second, the news flow is insanely bad right now. A federal circuit judge, a court, not the highest court in the land, though, but definitely a high one, ruled that the president's tariffs aren't legal. Hold it. Now, there was a time when this ruling would have been cheered by Wall Street. But they only saw the bad of tariffs, none of the potential positives. In the eyes of most experts, the tariffs were never going to be able to raise any real money either. But you know what? That did turn out to be wrong. The tariffs are raising billions, which helps to offset the cost of the president's big, beautiful budget bill. Again, Wall Street hated the tariffs when they were proposed and mostly still hate them now. But now that the tariff revenue might have to be refunded, the bond market's freaking out about the budget deficit. Plus, the president's team put the fear of the devil into us, so there was no way this negative could be ignored. But the stuff that they said about what could happen was just atrocious. Look, some of it could happen, but now we have to depend on the Supremes, where I'm guessing Trump wins because he appointed a third of these people. But then again, the courts always jump ball. Go ask FDR about that if you see him. The bonds, of course, were hideous. We have a big non-farm labor report on Friday, and the market's almost always turning negative now ahead of any big number. Why? Because unless everything's non-inflationary, quite a rarity, the Fed may look at these numbers and pause its plans for rate cuts. That means a raucous flow of news that bodes poorly for the Fed in general and Fed Chief Jay Powell in particular. Something that the market now really hates because it makes for a really nasty ad hominem backdrop, and we're tired of it. The president's going to get his way on lower rates soon enough, but, well, that's not soon enough for him. When Treasury yields go higher like this, the economy's in danger of faltering. The stocks that did rally today were mostly the so-called wrong ones, the defensive bargain basement retailers that supposedly offer value like the dollar stores or offer real value like the closeout stores. The former has tariff exposure, but that could go away with this court ruling. The latter sell goods where the tariffs already been paid by the original importers. People jumped out of the cyclicals into perma-growth, this typical rotation that can last a couple of sessions at most. More on that in a moment. Remember, what I'm talking about is that they sell the cyclicals to buy, say, General Mills. Even though General Mills isn't doing that well, it doesn't matter. Campbell's Soup, you get me? Safety first also means buying companies that get the consumer's wariness. First among equals being McDonald's, which is sensitive to the avails of everyday American. They were on this morning and they told a story about cutting prices. The worst stocks today, as befits of the horrendous wave of profit taking, are the best ones of the year. That's what I told you about when you get to this point in the year, you start bringing the register, which means the artificial intelligence components we all know about, namely NVIDIA and its compadres. Remember the long knives, which I have to start having a backdrop of long knives. I don't think you can get knives into the exchange, but long knives are what is out for NVIDIA. These stocks are so huge they can swing the entire market. In this tape, one company can be so big with so many tentacles that it can cast a pall on everything else. Finally, we have the requisite worldwide negatives, the axis of evildoers with China, Russia, and now India being thick as thieves, a story that the mainstream media hails as a major breakdown for the Trump administration's foreign policy. Meanwhile, we have a plethora of stories that contend that China's way ahead of us, or gaining on us, or doing much better than us, or maybe that we're stupid and they're smart, okay? They own autonomous cars better than we do, what, blah, blah, blah. I always feel inferior these days when I listen to these stories. So what do we make of these? First, let's not jump to conclusions based on a single session. We've seen this way station so many times, and it only ends up in the old winners resuming their advance. Unfortunately, people get shaken out by these rotations, so they miss the next leg up of the upside. The fear instilled by commentators, analysts, and journalists often makes it way too hard for most investors who are out there. Stay put. I hope you don't listen to them. Selling creates and begets more selling, and those who don't know what they own get blown out. If you know what you own and why you own it, these days are just garden variety pullbacks, the kind, let's rain for your garden. Now, my poor garden's not been attended to. Then again, for good reasons, as I attended the wedding of our research director, Ben Stoto, out in the mountains of Colorado this weekend. Mazel tov. Best wishes, whatever you want to say. Second best course of action, you just need to sit on your hands and watch. Don't bite on what's rallying. You won't be rewarded as there's no recession coming. That's just a typical throw off the scent move. Food stocks simply don't cut it. Sorry, you don't have shareholder activism and dissent in a group like we have in the food and beverage industry if things are going well. Third, when you hear that the big tech stocks have ridiculous valuations, how many times have you read that? You need to be thinking, how did they get that way to begin with? The answer is because they're the best and they can weather anything. Tariffs, global craziness, antitrust, Chinese genius, you name it. My strategy has been to wait another day and start buying them. There's always a catalyst that turns things around with these growth stocks. Maybe it's Broadcom. Hey, maybe it's Zscaler that got after the close. By the way, Broadcom is a $1.4 trillion company, and it rallied from down 10 points in the AM to close up 85 cents. Sometimes the rewards for my strategy happen extraordinarily fast. Look at what happened after the close. Alphabet got a shockingly favorable antitrust ruling from a judge who I thought hated them. They won't have to divest Chrome. They won't be broken up in some punitive way for shareholders. And they can still make payments to preload Google, even if they can't have exclusive contracts. Now, this is a huge win for Alphabet, but it's also a big win for Apple, which got paid billions, perhaps more than $20 billion a year to preload Google on their devices. Most wags thought for sure Apple would lose this source of revenue and numbers would have to be cut immediately. It could get even better. We keep hearing, including from me, that Apple has to buy AI, perhaps a Perplexity, to be more of turnkey with Siri. But with this ruling, the tables can be turned. Apple can make a deal with one of the AI bots for that bot to be the exclusive on Apple's 2 billion devices. But get this, now that bot company, they'll have to pay Apple because it's legal. What a turnabout. Hey, maybe another 20 billion headed Apple's way, maybe more. Those who sold Apple earlier because of a minor story of a departure of another AI researcher ultimately missed the big picture. This is how you don't become a millionaire. Reacting to those kinds of stories. Don't be silly. There's a takeaway for you. Finally, remember who's coming. The cavalry, in the form of lower interest rates and the big, beautiful bills can of stimulus. This thing was packed with handouts to industry, and that's great for the stock market. Here's the bottom line. I made a big study of days like today for my book, which comes out at the end of the month, How to Make Money in Any Market. Days like today are the reason why an Apple or a Microsoft or, yes, an NVIDIA haven't made more people millionaires. Days like today are dispiriting, they're painful, and they usually aren't alone. You have to trust the companies you believe in. Trust the market. That's the only way to make big money in stocks long term. And it happens every time there's been a sell-off like today since 1982, when I first walked down Wall Street on my way to Goldman Sachs. Manal in Georgia. Manal.
Thank you, Mr. Cramer, for taking my call.
Of course.
U.S. tariff on Brazil coffee beans is 50%, which has increased retail prices of coffee. Dutch Bros declared adding about 64 locations in the U.S. and have added to the breakfast menu. My question is, in your opinion, is it a good point of entry in Dutch Bros considering the tariffs?
I'm going to say that because I like this stock so much, the answer is yes. But as good as it is, I think people are losing track of a note that I talked about this morning about pumpkin latte and Starbucks. Yes, we've all had some problems with Starbucks being late, blah, blah, blah. But imagine this. we're still going there. And this pumpkin latte is very strong. SBUX. Zach in Ohio. Zach.
Hey, Jim, I appreciate you taking my call. I was wondering your thoughts on Citigroup. Looks like it had broken above some previous resistance around 80. And if you think it could benefit from this administration.
I think Citi's fine. I think Citi's fine. It's a good buy here. I do like Wells Fargo more, but Citi's been just a gigantic winner. Good callers. You have to trust the market for long term. In this game, that's the only way to make big money. Don't be the millionaire not next door. On Mad Money tonight, it hasn't been all fun and games for the consumer discretionary stocks, unless you're Hasbro. I'm detailing how the company has set itself apart from others in the group, and why I still think it's got a lot more room to run. Then, as I just said, historically, September is not a good month for the average. So should investors prepare their portfolios to get defensive? I'm going off the charts to find out. And we know that Taylor Swift is the ultimate influencer, but now her engagement has influenced Signet's stock. I'm hearing more about the impact and how the company is planning for a potential engagement boom with the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.